Guys, I want to welcome you to another episode of the Advisory Board podcast, where we bring in experts from the franchising industry to give you the actual scoop and some actionable data insights that you can use to build a successful brand and responsibly franchise. I've got Tony with me today. He's the CEO of I almost said Mighty Dog Roofing.
Yeah.
That was part of the pathway, but of
Yes, sir.
Horsepower Brands platform group. And he's awesome, guys. So I want to brag on him for a minute, and then we're gonna let Tony tell you a little bit more about Horsepower. But these guys, unless you've been under a rock, you should know who they are. And Horsepower Brands is pretty unique in that they're building a model that's taking a lot of the operational burden off of the franchise operators, so they can do what they're best at and build their business, work on the business less than in the business. So they got the Z Services group. They have like 10 different points of things that they're taking care of, like bookkeeping and marketing and even capital asset fleet management, recruiting, which is freaking huge, and a lot of those, even legal HR, all that kind of stuff. Even though obviously joint employer, blah blah blah. But you guys know what you're doing there. So
Yes.
Really cool service model. They've got 8 brands in the platform now. They've got their 9th that they're spinning up now, which is in a super cool sector. And Tony's been in the industry in franchising or franchise-related industries for a long time. Started with PepsiCo. He got recruited into franchising. He was actually a franchise operator, franchise owner in the nutrition space. Got recruited eventually into the Mighty Dog system, and then is now the CEO of the Horsepower brand company. So Tony, I could brag on you and Horsepower for quite a while. Love Zach, love Josh, love what you guys have done. Tell us a little bit more about you. Tell us about your journey getting into franchising and Horsepower, and then we'll jump into the topic today.
Yeah, Dave. Well, first, just thank you for having me. Looking forward to the discussion. Just quickly around myself, I've always been advocate and just entrepreneur in the sense of I love business. I've been always just fell in love with the business and how it operates. I started as a CPA, and in the world of audit and tax, you talk to a lot of people that own businesses. And I fell out of love with actually doing tax returns or preparing financial statements, and fell in love with more of the stories and working with clients and doing some consulting. So I've spent a lot of time as a CPA in that space and just working along clients and doing consulting. Through the journey, I spent some time in the PepsiCo system, and not a lot of people understand that in the PepsiCo system, 20% of the US approximately is ran by independently owned bottlers. And they call it bottler agreements. I would tell you it's very similar to franchise agreements. The one difference is it's a perpetual agreement. So those people that chose to sign on many years ago, they own those rights until they choose to release them. So was able to become part of a group that consolidated multiple families and then ran it in a centralized fashion. Early on, I was their CFO, transitioned into a role as their vice president of sales and marketing. Again, just falling in love with not the financial preparation or the statements or analyzing the financials on its own, is more just the business and creating business and revenue and running teams. And so not the typical path of a CPA to end up into the sales and marketing, but I had the power of PepsiCo and all the brands that they had within their portfolio behind me. So I told many people that it was more about leading teams and executing on the plan and doing extremely well. And we had a lot of success there. Earned sweat equity in a Complete Nutrition franchise group, and was part of that system. And so was part of a franchisee system that had over 60 plus stores across many states at a young age. And so you go through a lot of those processes, and we negotiated the acquisition of some stores. We negotiated into leases, negotiated sales, buys, all those different things. It was a success to get out of that system and work with the people that was involved in. We also worked very closely with the franchisor, and I have nothing but good things to say about them and how that evolved over the time that we were a part of that organization. As we looked at coming on to Mighty Dog Roofing, which is what you had mentioned early on, that's where it started. So I knew Zach Butler, and he was talking to me about coming over to this idea about Mighty Dog Roofing, and that's what it was in the beginning. Got to know Josh Skolnick through that process, but more than anything, over 6 months, I got to understand better home services. And I did a lot of research on my own, but also understood the stories of Josh and what he's been able to accomplish before franchising just in home services, and just fell in love with that industry and that concept, and thought if I was going to step back into franchising as a franchisor, I fell in love with the industry of home services and the outlook of it, what it looks like 5, 10, 30 years from now versus what it looks like at 1, 2 years out. So that helped in the decision. It took a full 6 months because I was in a pretty good seat over at that time. I was back at PepsiCo, and felt pretty good with where I was at. So it took a good 6 months to make that decision, that leap. And we've never looked back since. It evolved into horsepower, which we can get into a little bit today. But
Yeah.
truly, as I said, it's all around our people at Horsepower and what we're building, less about myself or the founders. What we got here at Horsepower is something unique, and we're continuing to build and scale it.
Well, I love it. And you're right. I mean, I've known Zach for, he was actually one of the first people I met in franchising. He was a franchisee of a brand that's still a good client of ours. And he and I got to sit down, he and his wife, I think they were expecting their first kid because she was expecting at that meeting. I just loved Zach. I thought he was awesome with the Butler beef, and like, he's just such a good dude. So you didn't fall into bad company. I'll just say that with the founder group there. Tell us just a little bit, if you don't mind, before we jump in, a couple of unique things about, I mean, we talked about the Z services, but what are a few other things that you feel are unique about the way that Horsepower is building a brand? And then we'll jump into our topic, which, by the way, guys, is about like, what are the things that are required to make a home service franchise model successful? Like, we're going to just kind of dive into several topics there. So tell us a little bit just more about the Horsepower structure, because I think some people find that instructive about like, well, what are you building and why is it unique, and how should they maybe change the way they're thinking about the industry? I love this.
Yeah, I love it. So Horsepower, there's three uniques that we believe tell our story and where we're at. We're going into our fourth year, and so where we're at today versus where we've been in the last 3 years, really these three uniques has evolved to this point, and it's created this strong foundation. I tell a lot of people going into this fourth year is the strongest foundation I've stood upon within Horsepower as we go forward, because we've been able to build this to scale. But the first one you already touched on, which we talk about, is our Z services. And that's our platform that offers solutions to common business problems. And so you buy into a franchise system and you learn about how to run that system within that industry. So if it's roofing, you understand how to do that and you're trained on that and all those components that typically all franchisors offer and provide. But when we look at it, is what about just the components of running a business? You mentioned recruiting. That's a standard component of being able to recruit labor, that not necessarily around roofing and being trained that perspective. And so Z services, we got 10 different focus points where we want to offer solutions to common business problems. We can dive into those even at a later point, but that's our first unique and one that I think sets us apart from many other franchisors, but we can do it at scale as well. Our second one is we look at data is our strategic assets, and we could there could be a whole episode on this, Dave, between you and I, in terms of what I think about data within the home service space, because it goes beyond just some generic things that people think about from data perspective of the homeowner, or how you look at KPIs and leaderboards. And then our third and final is our Howie connection, which is our brand that sits above all the other brands, which we can dive into. But the three of those together, if I'm talking to somebody of why Horsepower or what makes us unique, it's those three combined. It's something special.
Yeah. Well, and you guys clearly actions speak louder than words. You guys are doing pretty well in the market. So I appreciate you're a busy man, Tony. Thanks for coming in and sharing some insights. You guys are looking at and building brands and buying brands and building brands and scaling brands. Like I think you've got a really unique perspective today to dive into this topic, which is how do you guys and you specifically evaluate in a franchise or a business model to make sure it's really franchisable and can scale appropriately to help the owners be successful?
Yeah. Well, first off, we're always going to be at the home. That's just one of the things that we're focused on. So I couldn't speak to other industries like restaurants or retail, but I can tell you within a home service, we're looking at, I start initially of just looking at share of wallet, like understanding the consumer trends of where they're spending money at the home, like where are those dollars going, and understand that we want to go into large industry and sectors. And we want that space to be fragmented. We want it to be competitive because we want to get a share of that pie, just a slice of that pie. We don't need all of that pie. And so we want to make sure that the industry is of a certain size and scale that we can step into first and foremost. So there's high demand, it's highly competitive, it's fragmented. Those are key things that you may hear from a lot of different people, but we've passed on other opportunities that is a spend at the home, at the consumer level, but it's not a big enough of an industry or sector that we want to dive into at this stage. It's not to say that that might not change into the future, but that's typically been our acquisition target strategy at this moment. And then you had another question about, is it franchisable or can you build it? And that's a long and lengthy discussion that through due diligence, you have to better understand and do a lot of research on that industry. And so what we have done, and not to say anything that our side is right or another side, curious to hear if other people have done anything different, is we start with a founder location, 1 to 3 different locations that they're running and operating. We like that founder location to be 3 to 5 employees generally, and that it's a high average unit volume, something that is repeatable and that you can build at scale within a dense territory space. So something that's not all of Atlanta, but a denser area of Atlanta. And that they've been able to accomplish that with 3 to 5 employees over a period of time. Maybe they're at 10 employees now, but they've been able to attain a decent average unit volume with less employees. That's to make it repeatable, to make it possible. So that's one component. We talk to a lot of suppliers and distributors that are in that space ahead of doing a transaction or entering into a deal. Suppliers and distributors are a wealth of knowledge. Usually they're pessimistic as to whether franchising is possible in their industry. Roofing was one where we were told time and time again, it's not going to work. There was only 2 other franchisors in that space that reached a relatively small point and never could grow after that. So we were really the first in the roofing category to bring franchising in a meaningful way.
Yeah.
But being open to those suppliers and distributors do give you a lot of key components of how to run a successful business at national and regional scale, because there's other businesses that are doing it. And then the obvious factor, Dave, is looking at the profitability and the metrics within the business, and is there enough opportunity there for the franchisee to remain profitable, and also for us to build a business as a franchisor. There's got to be 2 components to that, so that we can provide the support and see that they're successful over time.
I love that. I had a great conversation at a conference with, I forget who it was. I'd love to give credit to them, but we were talking about this, and they said, a big mistake a lot of people make is they're trying to figure out, is this business profitable? Is they're looking at their net income without the impact of royalties and fees. Yeah. Right. And so I love that you said that, there has to be enough money in the pie at the end of the service delivery for them to be profitable and successful, and for us to be profitable and successful. And usually that last part is what I see a lot of young brands screwing up. So take note of Tony's advice here, guys, that you've got to make sure you're evaluating not only the business model in general, but the business model plus the impact of the royalty fees and ad spend and all those things that, the tech fees, whatever you're going to charge to make the business sustainable for the franchisor level. If you haven't thought that through, often what I see is brands that have to sell 3 and 4 packs, or else the franchisee can't make enough money to make it worth his while or her while. That's not a franchise, right? That's not a viable franchise model. So riff on that more, because I'm sure you have a lot more bottled up you could share on that. What have you seen?
This goes back to my CPA days. So sometimes I ask permission to be a nerd for a little bit, but
carry on. I've got my glasses on. We'll talk.
People also have to look at a percentage of sales. You could look at an FTD, and as long as that item 19 or FTD is providing proper disclosure of the royalties and things of that such, you could look at the percentage of sales and say, this doesn't seem as good as this other opportunity on the percent. People miss too many times the demand from the consumer in that industry, in that sector, and the ability to grow revenue. And when do you start to plateau? Like, I'm going to take a business that can grow revenue at a higher level, even if it's a lower percentage, if I feel I'm going to plateau against this other one that I need more locations, like you say, or I got to invest more. And the investment alone is going to eat up any of the profit potential that I think that's there. So the percentage of sales is not alone the single factor of whether you should say this makes sense or this is not. And we have too many deals and opportunities in front of people where they look at that and they hyper focus on that, and they're not factoring in the consumer demand and the long-term growth of that business. Being part of the PepsiCo system, like I was able to see like true long-term, a perpetual investment that those families never wanted to give up that investment, because it's beverages, and while the beverages may change, they were bought into it. Home services is that same thing. It's a long-term investment. The second thing to nerd out is really the return on cash. Like, how do you use debt in your favor and leverage appropriately? And if you can step into an investment at 20% of that investment with cash, and then that return year 1, 2, 3, 4, 5, what's the return on the cash instead of the total investment? The total investment still matters. The return on the total investment still matters, because you got to be able to afford to pay down that debt, but you're leveraging your cash at the time to get an appropriate return on that investment. And It's an interesting stat out there that they've looked at the home sector. There's publicly traded companies in the home sector, and it consistently has outperformed the S&P for many years, many years. And I don't see that stopping. I just see the home service segment continue to outperform the S&P. And these are companies that are manufacturers and distributors of that product to that contractor or our franchisee. So if they're performing well, you got to believe that we're performing well at the contractor or franchisee level too.
Oh yeah.
So
Well,
yeah,
I see that because like the demand doesn't change, right?
yeah,
Economies dip and climb, and I still have a drain that needs to be unplugged, right? I still
yes,
have my walls that need to be painted. I still have my roof that needs to be fixed so it doesn't ruin my asset, right? Like I love the home services space. It's where I spend a lot of time too, and it's just I anyway. My wife and I bought a franchise, and I put 12 home service brands probably in front of her first
yeah,
before we ended up looking at the one that we bought. But she wasn't. They're the dirty brands, right? People aren't like drawn to them. But boy,
yeah,
what a
yeah,
healthy business model. I'm more interested on the P&L than I am on like the flashiness of the brand. And
yeah.
so I'm with you 100% on that one, Tony.
Yeah, yeah. You remember horsepower? Mighty Ducks started in 2021. So my confidence was high. Like I was excited. Pandemic hit. At that moment, we're still going forward. There was no stop. We're going at it.
Mhm.
We performed well through the pandemic. Then interest rates started rising, and interest rates has actually in home buying is down. So people are staying inside their home, and what are they
Repair.
doing? They're upgrading their home and spending money for maintenance. So
Yeah.
it's just time and time again, depending the macro can scare people, but I feel like we're in it at horsepower, we're in an industry that time and time again, no matter what the macro is doing, we got a steady growth model inside our business.
Yeah, it's funny because I'd expect with the home sales dipping that some of these services would go down, but it's been the opposite. It's been
Yeah.
steady. I wouldn't say it's like skyrocketed, but it's been
No.
where you had a lot of like them people moving around, then replacing things and financing new roofs into the house, like that on the roofing side. I think that fueled the growth, and then it's just shifted. But I'd say it's been pretty steady. I haven't seen a big trend. You would know better than I would on roofing specifically.
Yeah, it's well, roofing, like if you look at the publicly traded companies, Owens Corning, Beacon,
Mhm.
they've had you would have wanted to own their stock the last 3 years. They've done extremely well.
Yeah,
But all home services is 600 billion size of a sector. Like if you add all the home services together, it's over 600 billion. It's grown at 2 digits, 10% plus year over year. It's substantial. And so you can be a big player in that space.
Oh yeah. Yeah, I love it. Well, and coming back to the question, the topic, right? Like the reason we're
Yeah.
talking about this is because these are things that you need to be evaluating about your model. If you're looking at buying a franchise, you should be evaluating the fit and the industry and the growth of the industry and the potential revenue caps on the territory size. Like
Yeah.
these are all things that fit in. And home services just happens to have really good numbers here. So do other concepts, right? Don't get me
Yeah.
wrong.
Yeah.
But as a person who's potentially going to franchise a brand, you have to be thinking about all of these factors. If you're in a super tight niche, like let's say you do like historical restoration or something like that,
Yes.
is that truly a scalable franchise brand? And if it is, well, once you get to the Mississippi, you're going to be done because there aren't enough old homes west of the Mississippi that you can really
Yeah.
successfully franchise out there, right?
Yeah.
So like you just have to be like really careful. I think about really thinking about the scalability and the growth of that concept in the hands of an owner, an average owner. What does David Barr say? An average person on an average day in an average market with average talent can have above average results, right? Something like
I
that.
like that. Yeah. I like that. Yeah.
But that's also we're kind of touching on that too. Like the model itself has to stand up.
Yeah. Yeah. And if you get more unique or there is no competition, you got to also think about your franchisor. The example you gave of unique restoration, how's your franchisor going to build a sustainable business that can support you as a franchisee if the need isn't across the nation for all people? Like, so even stepping into a model that's so unique, you got to think about long term. Is this franchisor going to be able to build their business up and offer the support to myself as a franchisee, given this industry is segmented into certain areas of the country or region? And
Mhm.
that's where we've had to pass on some opportunities. So we couldn't envision how we could scale it on our own to support our business model. And so if we can't be a franchisor, we can't have franchisees. And there's some industries that, I don't want to mention on this podcast, but there's one where we've had to walk away from of whether it's franchisable or not, in our opinion.
Mhm. No, but it's smart and just something everyone ought to be considering is if you think that the true franchise density you could get is about 50 units, 100 units in the country.
Yeah.
Unless you're charging double-digit royalties, which now makes it
Yeah.
unsustainable. Like, you're not going to be able to staff appropriately to support
Yeah.
the franchise growth. And I want to ask you about that. Like, what adjustments? Like, where do you feel like people have to look at? Like, what would you tweak in like a chuck in a truck business so that it truly is franchisable? Like, if you were
Yeah.
to consider that kind of a paradigm.
Well, we spend a lot of time and energy up front and resources and investment into the branding. I'm passionate about the branding that our teams put together. We have an incredible team. I'm not gifted in that area. And so it's an entire team internally and a couple outsourced people that help us with the brand. And so you do want to be recognizable on the street and in front of the consumer, and one that looks professional and one that looks upscale and all those good things. So I'm biased, but I'm proud of what our team has done within horsepower with respect to the branding.
Mhm.
The second thing, it leans with technology, but I believe in innovation, and this kind of even goes back to days where I learned from somebody at a high level within a company that he talked about innovation. I just said, year over year, how do you think about this? What does it look like? He mentioned he had a very good business from a core portfolio. He said the core is 90% of the business, but Tony, if each year you're not putting 10% into innovation in a meaningful way, you're going to fall behind on the long run. Over 30 years, you're going to fall behind. So you got to put some effort each year towards innovation. And I think the same is in home services. I think the innovation's far behind in home services of where we could be for us, the consumer. They figured out rideshare with Uber, right, and Lyft. They figured out lodging with Airbnb. Where have they really figured out something for us, the homeowner, that makes it so easy for us to get the plumber to come out or somebody to come out to help repair something or to maintain something or replace something? It's not easy for us. I mean, that's just the reality as a consumer. And so I love branding, innovation, and then just simply making the process, the operations, the marketing, the sales, the playbook within the system, continuing to focus on how to make that as easy as possible. And the fourth and final one is I always like to start with the consumer and work backwards. How do you make that path for the consumer frictionless? How do you make that as easy as possible? Partly with innovation, but just in total, like communication, booking appointments, providing the service, jobs completed. Like, how do you make that easy for the consumer? And so we're always looking at that consumer journey all the way from the beginning, all the way to the end, and trying to make it as frictionless as possible.
Yeah, no, it's so smart. And it's funny because in a really fragmented industry, like the plumbing and HVAC had like 300,000 businesses registered in that
Yeah.
sector. Like,
Really? Okay.
yeah, it's huge. It's
Yeah.
huge. At least that's a database metric. It might be 2 years old, but there are
Yeah.
tons. Maybe it's less now because of all the M&A and the roll-ups, but
Yeah. Yeah.
it's so fragmented is the point. And
Yeah.
these guys, I mean, a lot of these guys are operating $200,000 of top line revenue a year. They are not thinking about the customer journey and marketing and branding. Like, it's just not, it's not a skill set. They're a chuck in a truck, a solopreneur. And so, like,
Yeah.
it gives you a massive competitive advantage, I think, in franchising in this highly fragmented sector where I don't want to. It's like a pro baller coming down and playing little league sometimes,
Yeah.
strategically. Not that these
Yeah.
people are capable; they're probably as skilled a technician as anybody on the planet. But it's a
100%.
technician trying to be an entrepreneur versus an entrepreneur trying to hire a technician. Like, there's a big difference there. So,
I give lots of accolades to that person that's in the truck offering that service for him or herself and doing it at a level that makes their life easy, whatever that looks like. But you're right. They may have reached a point where on the weekends they go out boating and they're living the life that they want to live. So they're not looking at it's Tony's Heating and Air. And I'm good with that because I get enough business to live the lifestyle I want to live. So do I really care about creating a logo or not? Or do I really care about refining my process here or not? Do I really care about innovation? If I'm living the lifestyle I want, I give a lot of accolades to that person that's figured that out and reached that point in life because that path is equally difficult to get to. But franchising, it just gives more and more people the opportunity to do that, but to do that at scale.
yeah, I agree 100%. I've got family members that do
Yeah.
that, and I see I'm like, you know what, like, hats off. Sometimes I wonder, like, I think quality of life sometimes is better for that guy than me because
Yeah.
he works just enough to do exactly what he wants to do every day, and I
Yep.
think something kind of beautiful about that, and no
It
judgment
is.
whatsoever. Like, you don't have to live in a house on the hilltop, to be happy.
Yes.
Frankly, I think some of them are more happy because they got a 20-foot bass boat and they're out every weekend, and that's
Yes, sir.
life.
Yep. Yes, sir. Yeah, I would agree. Yeah.
But I do think the franchising can get you to that, that bass boat on the weekend a little faster and a little smoother. So there's also that, right? Uh,
Yeah. Yeah.
so tell me about support, because I just see, like, one, you guys have obviously with Z Services and other programs, you've invested heavily in supporting the things about running a business that nobody wants to do. Like, nobody wants to do bookkeeping. Well, maybe nobody,
Yeah.
but you came from a CPA to the dark side of sales in your career.
Yeah. Right.
Clearly,
Yeah.
you didn't love it. So, and you were trained for it. So, I mean, there are those sorts of things, the operations, the recruiting, like the fact you guys do that is huge. That's what the biggest problem I would say with a lot of the home service brands we work with is they're just trying to find good people to do the job and deliver the service and get the quotes done or whatever. Like, that's a big challenge. So where do you guys see um, support playing a role, and how do you see people, even maybe share some insights of how are people maybe doing it wrong and how are you seeing
Yeah.
people do it right? I would love some examples.
I got to first hit on the even the bookkeeping and transitioning to it. I learned at a young age, and you got to realize I went to college and got the accounting degree, got the CPA and all that, and to switch. But I just learned quickly an hour of my time creating sales and revenue is worth 20 times of my hour of my time doing bookkeeping. And so I just fell in love with the idea because it truly became the multiplier. And there's a lot of people that
Mhm.
were around me that helped coach me towards that piece. So I owe a lot of gratitude to the people that I worked alongside to make me think like that. And so I just had to touch on that because you had mentioned it. But within horsepower, within Z services, it is when whether we're doing it right or not, people need the support at it. Owning a business is difficult. I mean, it just is, it's flat out difficult to own a business. And so week to week, you lose an employee. Now you got to recruit another employee on top of running your business. So now you're 2 years in, you're running a business and you lose one of your 10 employees. That's 10% of your workforce. One of five is 20%.
Mhm.
And now you got to go replace that person. And that's not something you do week over week. That's not a focus point. So our service called Z Recruit, we have recruiters staffed up to put that job posting out there immediately and provide applicants into your inbox within a period of time, hopefully 7 to 10 days. You're now talking to qualified candidates that are for that position that just left your business. So the quicker you can get somebody back into that role, the better your business is going to sustain that loss. Because it is a loss to lose an employee, especially if a good employee. That's a loss to your business. And the quicker you can replace that employee and put a new person in, Z Recruit is something that we thought that it's a no-brainer. We want to help our franchisees that want to elect it. A lot of our Z services are voluntary, some are required. When you get into the bookkeeping, we do require that service for our franchisees because you need to have a set of financials that are consistent, that are kept up to date, so that not only can you file taxes at the end of the year, but you know where your business is month over month, quarter over quarter, and you can do more effective planning. That first year that you're in business, there's so many things that you're just trying to go tackle. And I even gone back to go focus on revenue creation activities, even though I'm a bookkeeper in the past or accountant of the past. Try those first 12 months, wake up every single day, focus on revenue activities.
Mhm.
Quite literally every single minute of that day, what are you doing and is it creating revenue or not? Because that's the hardest part in the new business. And then 12 months later, just know that your bookkeeping was done by ZBooks and that you can tackle that and come back to that and evaluate that once you've built a sustainable business on the top line. And so all these service lines, it's also trying to take our candidates through the process early on and tell them the story of why we thought to offer this as a service under the Z services portfolio, and to make sure that they understand is I truly want them to go back and grow revenue as fast as possible, focus on the customer experience and all those good things. And so if we can offer the layer of support to do those other things that they're not good at, or you just don't do frequently,
Mhm.
then that's what we want to do. Like even fleet, like could you buy a truck? Could you take it down to go get it wrapped by somebody and put it all together? Sure. But that might take 8 hours a week because you've never done it. Or you could call somebody for 15 minutes and they'll have you taken care of and it'll show up to your door within 3 weeks or whatever the case is. So like
Right.
that just saved you 7.5 hours that you could go talk to builders, networkers, realtors, insurance agents, everyone else to create revenue. And so that's how you're never going to be able to factor exactly what it saves you in terms of expenses, but the idea of what it could create you in the long run, that's the real benefit of it.
Yeah, well, I love what you're saying there because I mean, taking a step back from the individual services you offer, the real strategy is how do I help these owners focus more and more and more of their time on revenue generating activities. At the end of the day, it doesn't matter how tight the books are. If there's no dollars coming on the top, you're not going to get as much out the bottom. And so I love that. I love that. Whether it's bookkeeping or recruiting, tell me about. I mean, making things required is tricky, right? As a franchisor, I bet you have some insights into that. Like as a franchisor is considering, like, what do I make required? What do I not? You mentioned bookkeeping. I'd have to agree with that because it's like that's also where you can make sure royalties are being calculated properly and all that stuff. But what are some services you find it makes sense for franchisors to say, hey, this is required and this isn't? What have you discovered?
Well, first and foremost, I can tell you that this is an area of the business that Horsepower has made the wrong decision in the beginning and has changed and evolved with a franchisee focus. I'd hope that franchisees that I've been able to converse with around around this topic of what within our Z services, they would say that, we made changes over these last 3.5 years with the focus on the franchisee. And so when you require anything of anyone, you better be dialed in and it better be good. Like it better be perfect almost. Because if it's not perfect, there's always something that they're looking for. So ideally, as we look at scaling Z services, we want to continue to make more of the services voluntary, but make sure that they know that they exist so that they can elect to use it or not. And so we've transitioned more towards that, Dave, from where we started to where we're at today. And that lends a hand to, like, I feel like I'm standing on a stronger foundation today because these are available to the franchisees, but it's not required. And so if I could learn something from the past to now, as we would have came out with less requirements. I think the bookkeeping is a requirement that we will retain or at least continue to keep in space. And if they want to not use Z books, then they have to prove to us that they have another solution, because that's something that if you get behind, you'll never catch back up. And it's important that that's being taken care of. But the remaining service lines within it, we're always going to have control over our branding, our website, our digital existence, and those components. But Z marketing, we're partnered with different marketing agencies, and we continue to offer some flexibility within that so that they can spend the dollars as they so wish or choose. And so, we'll see as we evolve as an organization where we can offer flexibility. We are making the choice to lean that direction more than the requirement side. And that's just our opinion over the last 3.5 years.
Yeah, well, you guys have done it though. That's why I wanted to ask you, is because I knew you guys had gone through the transformation, and a lot of young brands are thinking, "Ooh, I can make it all required." And and on the business side, like there's additional revenue now coming in that gives you the ability to fuel the engine to give more support. Like I get the model. It's not all about being greedy buggers, right? It's really about giving them consistent results. And if you can do that better than a third party, then do that. And yet there's also like increased frustration, liability, and like even though it's amazing, sometimes certain marketing strategies just don't work in certain markets. You're too rural, whatever the case may be, right? It's even true of like Angie and Thumbtack leads. Like some markets are great, sometimes they're not. But I think that you're wise as these young brands are thinking about how do I make multiple channels of revenue come through my franchisees. Also, you have to be careful. There's a little bit of a liability concern there, right? If you've got all the things that you're supposed to be required and you're required to do, and you can't do them real well because you as a franchisor don't have enough resources to actually do that thing as well as a third party that's the only thing they do. Like you got to be careful about that. I love that. So that's great wisdom. Thanks for sharing that.
Yeah, and also just focus on what you're good at, right? Even in the marketing, I think in the 3.5 years, Google has done significant updates to the algorithms or their system 5 times, significant, that has required major shifts on how you look at your SEO strategy for all the components within it. And so how are you going to always stay ahead of the curve if you're trying to do the marketing and trying to be a franchisor and trying to, so it's staying really focused and aligned to what you're good at, which for us, we want to be a franchisor in home service space. And so that's helped realign our organization back to center with some of those things. So it's good discussion.
Yeah, well, even what we chatted about before we started recording about software, like how many people I know that are just chasing this unicorn of I'm going to be a franchisor and I'm going to develop my own software, and I've never seen that work well. So unless you come into franchising and you've been a software development manager or systems architect, like the reality, every minute you spend chasing down that rabbit hole is not a minute you're building the brand. It's not a minute you're helping the franchisees. It's not a minute you're being strategic. It's foolhardy. I've seen massive organizations try to do it and still fall on their face, with
Yeah.
multiple $1 million budgets. It's just not a wise approach, not a good use of resources when, frankly, for a fraction of the cost, you could go find someone who's an expert at whatever
Yes.
software that is, and then even customize it for a fraction of the cost. And then maybe three months versus 3 years have not just a working prototype, but have like awesome stuff, right? Because that's all that they do all day long. So
Agree. I would agree. We would agree on that front.
yeah. Hey, so data. I mean, I know that this is a conversation in and of itself, but a successful franchise system, which is the premise of this discussion, right? In order for it to run properly, it has to have data. And I know you could riff on this for an hour, but
Yeah.
what would you say, very high level, are a couple of the key things that a franchise, someone who wants to aspire into franchising or running franchise system just has to have data wise to be successful?
Well, if you know me and the team that knows me, I'll go back to data with the same statement. So start with the consumer and work backwards. It's actually something that Bezos would say within Amazon. Like Amazon lost money for many years, but he stayed focused on the consumer and tried to focus on that. He was solving convenience within that world. But so if you start at the consumer, even from a data perspective, is how does that start out in their journey? So it's the marketing and the appointments, and so we measure 9 key KPIs within each one of our brands. And from a data perspective, the challenge to our teams and somewhat unique to us, because we're not acquiring existing franchise systems with 75 franchisees and 10 years of history where you can compare sales to sales. We're starting with one location and we're growing it.
Yeah.
And so what we've set out to do with our data is we've created, and this is the team within Horsepower has done this, and all accolades go to our team internally that's done this because they've really hit the bar on this, is 260 weeks of targets have been established within each one of those 9 KPIs. And 260 weeks is 5 years. And so when you start week 1, the amount of organic appointments versus paid appointments is less than what you would expect week 40, week 90, all the way up to the 5 years, 260 weeks. And so over that pace, we're graduating you in targets that you need to establish. You and your team, your franchise location, need to establish just within those 2 KPIs. And then we dive into average ticket. Average ticket grows as you gain experience, knowledge, confidence. It's being able to upsell within the home. Our Gatsby Glass model, you think about just going in for a shower door enclosure, but then talking to that homeowner about railings, mirrors, all the opportunities within that home that involve glass. With confidence, education, and know-how, you can really increase that average ticket. So our target for average ticket grows over that 260 weeks. We measure close ratio, estimates provided at the time of appointment. Sales is one of the 9, but sales is in my mind is the very end. Sales doesn't tell you the full story. The 8 KPIs that led to the sales is the real story behind it. With what the team was even able to do beyond that, which is just a testament to what they've been able to accomplish, is now they rate those KPIs to targets, and we've created a composite rating that makes it as simple as green, yellow, and red. And so if within the 9 KPIs, if you got 7 to 9 of the KPIs in green based on targets, it means that you're in total green and that you are marching towards, at week 40, towards a healthy business and sustainable business and profitability. And so you should feel good at that point. But if you're in yellow, like, what are the things now our franchise business coach and you are going to talk about in that 30 minutes that you meet in the week? Again, how do we make that the most impactful, efficient time to spend together to focus on the right KPIs? We pull up the composite leaderboard. Where are you, red or yellow? Let's focus on that. Let's talk about that. Let's create 7-day action items to move that just an inch forward each and every week. And that's something that we accomplished in 2023 because we were wrestling with it in our first 2 years of business because we didn't have sales compared to sales. We didn't have that luxury or that benefit that other systems do. And we finally just said, blank slate, like, how do we do this? How do we give the franchisee a roadmap to success? And that's something that we've been able to do. I think it's something that could apply to any one of the franchise systems out there, retail, restaurants, et cetera, is to give that entrepreneur, that new business owner, don't tell me about the most successful one that's 3 years in. Tell me what I need to do week 1, and tell me what across a certain number of KPIs am I seeing success? So in week 10, like, even though it doesn't feel success, am I on target and on trend? And that's what we try to do within Horsepower.
There's something unsettling about not knowing where you stand, right? Like
Yes.
even as a franchise owner, a business owner, an employee, like this is applicable across the entire spectrum of the organization. But if you don't know where you stand, then you feel uncomfortable. And
Yeah.
so yeah, I think it's great having those. I haven't talked to anyone who's had like that level of KPI mapping done from day one, but it
Yeah.
gives you, I mean, when we bring on a new member of our team on the sales side, they know the like for 3 years, like what should their targets be, and it's a ramp, and so they can see it's not overwhelming to get to that number because I'm building the little blocks all along the way.
Yeah.
And
Yeah.
so I love the way you think. I think our brains probably operate a little similarly.
Small
Yeah.
wins matter, right? It goes back to one of our three uniques. Data is our strategic asset. And if you look at data as an asset, that's something that you leverage to get more out of it. And so like, how do we do that? And that's a challenge to the team that our executive team put out there. And we talk about it a lot. Like, how do you make it a true strategic asset that has value? Not just talking about, yeah. So pretty proud of the team for that piece. Even so, if you don't mind, I'll go into data just one step further.
Yeah.
Um, so then on the other side of it, the consumer data that we're collecting, I always like to try to provide a 30 or 50,000 foot view to the team to then take it from there. But I tell them all the time, it's about experiences. So what's the experiences happening at the home? Because too many people, if I just say data at the home, you're going to tell me first, last name, email, phone number, address, maybe number of bedrooms. That's great. But what about the experiences? So Mighty Dog Roofing, we go there with a drone that flies 30 to 50 feet above the roof. And we take pictures down to the nail size on that asphalt shingle. We're collecting those pictures and we're retaining it to the home address. We go to a home and we do estimates for painting exterior. You have to get measurements, and there's software out there that will take the measurements of that home, the exterior of the home, windows, etc., so that you can quote it. But the experience of taking the actual physical measurements, and now you have that at a home. Yes, the home could add on, I guess, into the future, but you have a one-time experience that you can collect and now save to the home address. It's long term for us, but we're starting it now, and we're talking about now, which I think is going to be cool. That I hope I may not be with the organization 20 years from now, but I hope that maybe they look back and who was the team that made the decision to start to collect that data early on in the process, and I'll be like, well, I was part of it, and so the team's doing a really good job of bringing that together. But it goes back to that center point where I talk about data is our strategic asset, and you think about value creation, not just for us, the franchisor, but for the franchisee that could step in and acquire an existing location that's collected this data for 5 years or whatever that looks like. I believe we're helping create value creation for the franchisee's business and for our business long term.
I agree with you 100%. And to a lot of the investors, a lot of guys are looking for exits at the end of the day. I'm not sure what your game plan is, and you don't have to answer that or address that at all. But a lot of the big strategic investments that are happening are also around data, right?
Yeah.
Like a big strategic advantage or asset that we've got is I could probably tell you, we're going to probably do it this year, anonymize the data. I
Yeah.
can tell you which lead sources are producing better results across hundreds of brands, thousands of locations, right? Like I could show you that data to investors and groups of people who are trying to aggregate. That's invaluable information. But you guys to create, 3D imagery of the entire home is non-invasive, but also an incredible asset for you to say, oh, well, now I've got a power washing business or a siding business. I want to review the database and actually look at the homes before I show up and see what, I mean, oh, I can actually not show up and I can quote you over the phone with 100% accuracy.
Yeah.
Pretty powerful. So I love that you guys are thinking 3-4 years down the road there.
It goes to digitizing our world of I can order a ride share in minutes. I don't have to wave my hand for a taxi. We forget how much we've simplified that process. Like I show up to the airport, I'm hitting Uber before I step off the plane. Like we forget about, like, it used to be days of taxi and you walk into a line. But in home of what you just said, that would be unbelievable, frictionless consumer path and journey, and truly what the consumer wants. We all want time ourselves. So if you can provide a bid or a range or estimate within a certain time frame because you already have this data point, you've just saved me time as a consumer. You've offered me convenience, just like how Amazon did and what they did, like long term. Like if you continue to figure those things out, I think it's a path worth pursuing.
We'll have to talk about that. I've got some thoughts for you on that.
Yeah.
Sometime later, we'll chat about that. Tony, you've been absolutely awesome. Thanks for, I mean, sharing successes and mess ups and lessons learned. Like
Yeah.
this has been super valuable. Hope everyone pays attention. Some of the data points, guys, just a wrapping thought for me on this is, and it was a subtle mention, but I want to bring it back to this. We talked about how do you create a scalable and a valid franchise model. If you are so encumbered by manually trying to assess where your franchisees are maybe screwing up, you have to call them and interrogate them every time with your field service team to figure out where you might be able to coach them because you don't have proper KPIs. You'll never be able to scale because you have to staff too heavily at the franchisor office to be able to properly support your franchisees. So don't think about data as like this ivory tower, cool idea. It's actually a business necessity if you're going to build a scalable franchise model where you can properly support and incentivize your franchisees. So I don't want that point to go unnoted. And I appreciate you giving us all those details today, Tony. Thanks.
You bet. And Dave, I'm glad that our paths crossed and I was able to join you, and it's been worthwhile, and I appreciate the invite and the opportunity.
Yeah, thanks for being here, man.